Welcome to Trade Pro. In this video, I'm going to explain a highly profitable trading strategy that is one of my all-time favorites. If you are struggling to find consistency with your trading, this video can help you out a lot by giving you rules to follow that will save you a lot of time and money as you go through your trading journey. This strategy only uses two indicators in its most basic form, but later on in the video, I will talk about two additional indicators you can add in to improve the results even more. So now let's get into things, starting with the basic indicator setup, then we'll get into the strategy itself. This concept can really take your trading to the next level if you've been trading blindly thus far. So let's see. All right, first I'll go over the basic indicator setup and the basic strategy, and later on I'll get into the advanced version. So starting with the indicators, all I have right now is a super trend and a 20-period exponential moving average. For the super trend, I'm currently using this one here by this author whose name I won't try and pronounce, but it has 27,000 likes in the TradingView library, making it one of the most popular indicators all around. Then just a basic 20-period exponential moving average here. Nothing out of the ordinary. And for the super trend, it does have default settings. So with that out of the way, let's get into the strategy itself. Now for this strategy, the super trend will be used as the basic trend direction indicator, meaning you can only take a short position and look for short trade setups when there's a red super trend. And when there's a buy or green super trend, you're only going to look for a buy position or buy setup. Then there is the 20-period exponential moving average, which is going to serve as our area of value to look for a potential trade entry. Essentially, we're looking for pullbacks that go in line with the trend direction as determined by the super trend. So let's show some examples of what I'm talking about. If the super trend is red, you're looking to sell when the price has come back to at least the 20-period exponential moving average. So let's just go through here. Now it's green. We're looking for pullbacks into the 20-period exponential moving average so we can get into the trend at a discount with expectation that the trend is going to continue. All right. So we're looking for pullbacks going with the trend and essentially just expecting a continuation move of that trend direction, which is determined by the super trend. So you have something telling you what the trend is, and you have something telling you when you're at an area of value and a good time to look for a potential trading opportunity. You also have a stop loss indicator. The super trend can act as a stop loss indicator as well. So if you're looking to enter a trade, a good place to place your stop loss is at the super trend. And I always recommend targeting at least 2 times the risk if you're doing a pullback style trend following strategy. Often you can get much more than that. So there are many ways to kind of have a more loose take profit target, but to keep things simple, I'd recommend, especially for beginners, to start with a strict risk to reward ratio of at least 2 to 1. All right. So this is really how easy it can be. And of course, it's not going to work always. You will take losses, and that's just part of trading. There is no magic strategy. But having these simple rules to follow, like trading with the main trend as determined by an indicator, and only entering if price is at an area of value, is so valuable. It's so important to have these rules to follow because it's going to keep you out of entering into a trade while price is extended. Probably where most people short is at these extended portions right before the pullback. So be that smart trader who enters on the pullback at a discount and not the guy who gets in once price is already extended and then it's right just going to pull back to your stop loss before continuing in your favor. So be the trader with rules that tells them what the trend is and when it's good time to enter in to the trend and expecting continuation of that current trend. We can see it again over here. We get the pullbacks after we get the green flip. And of course, when the trend changes, you're going to take a loss. It's just how it works. But as long as the trend continues, and trends continue more times than not, you will have winning trades going with the main trend direction. Using a good risk to reward ratio, you're going to be profitable in the long run. So that's the basic strategy. It's so simple. You have a stop loss indicator, you have a trend direction indicator, you have something to tell you when prices pull back to an area of value. And now let's get into some more advanced tactics, I should say. We're going to add in the stochastic and a multi-time frame exponential moving average for a higher time frame trend direction indicator. You don't need to do these things, but they can be helpful. You may get less trade entries, but they will improve your win rate overall in the long run. So let's add those in and talk about how to use them to your advantage. All right, here I am now with the 200 period exponential moving average of the daily time frame on my chart, along with a stochastic. So if we take a look into this 200 period exponential moving average, you can see I've switched the time frame to 1 day. So this gives us the bigger picture view of the overall trend direction in the market. And then for the stochastic, I have changed the setting so that the smoothing is 3. So how do we actually use these indicators to our advantage and kind of complete this strategy, make it better? Well, with the 200 period exponential moving average, as I was saying, it gives us that bigger picture trend direction. So you're only going to be taking short positions when price is under the 200 period daily exponential moving average, and you have the 4-hour time frame red super trend as well. And it's the opposite for longs, only taking long positions when you get that green 4-hour super trend and prices over the daily 200 period exponential moving average. So you're going with the 4-hour trend, you're going with the daily trend, which puts the odds that much more in your favor and keeps you out of some of the more choppy areas. As you can see, this does stop you from entering trades here. It does stop you from entering trades in this, and this areas here. So it keeps you out of a lot of the more choppy sideways trading environments. Of course, you're going to miss some winners, but it's going to save you more times than it's going to lose you out on winning trades. So now let's talk about the stochastic. How can we use the stochastic to our advantage? Now that we've got the multi-time frame trend direction analysis, we've got area of value indicator, how can we possibly use the stochastic to our advantage even more? This is going to be with hidden divergence, and you can do this with pretty much any oscillator. I've just chosen the stochastic for this example. So let's take a look at some examples of hidden divergence using this strategy. First of all, what is a hidden bearish divergence and what is a hidden bullish divergence? Well, a hidden bearish divergence is when you get a lower high on the price action, but at the same time, you get a higher high on your oscillator or other indicator. So I'm going to draw in some instances where we see hidden bearish divergence, seeing as we have our bearish trend set up with the super trend and the 200 period exponential moving average of the daily time frame. So we see it many times actually. We see it here, we can see it here, and if we draw it in, so we look at this peak right here, we see it going to over here, we get a much higher point on the indicator, and at the same time we're getting a lower high on the price action. So you can see it happening quite frequently along this downtrend. So if we look to here and then look down at this pullback here, we get the hidden bearish divergences quite frequently throughout this downtrend. And you actually get it right here when you get this buy signal on the super trend, which is another reason to not take this buy signal other than the fact that it is below the daily 200 period exponential moving average. Now let's take a look at some examples of hidden bullish divergence and how it can help us expect a trend continuation move. Now here we are in an uptrend with price over the 200 period exponential moving average of the daily time frame. So let's look for some hidden bullish divergences. Starting at the beginning of this uptrend, we do see a hidden bullish divergence occur right here. and it happens to be the first pullback into the 20-period exponential moving average. You can see we get this higher low on the price, but a lower low on our stochastic. And then we do see another instance of a hidden bullish divergence right here on this pullback. And then we see it again on this pullback here. So we just get these hidden bullish divergences occurring all the way up in this trend. We're getting it again right here. And each time it signals that the trend is likely going to continue. So it's just another factor that you can add into the strategy and up that win rate, add some confidence to the strategy, and really build a complete trading system, giving you rules that will keep you out of bad trades. Otherwise, if you don't have any rules and you're just going based on your own experience in the market, you're going to find yourself making emotional decisions and ending up in trades at the top of moves right before a pullback, which will stop you out or get you scared right before a trend continues in your favor. So that's it for this video. I hope it was helpful. I do want to shout out my affiliate here at the end, but if you're not interested in my affiliate, I hope you enjoyed the video and have a great day. Now on to my affiliate shout out. Here's my affiliate, capitalize.ai. Please check out my link in the description down below if you're interested in code-free trading automation where you can easily backtest and simulate trading scenarios with no coding experience needed. It's completely free, so check it out if interested.